economic breakdown. There's a ton of opportunities in all of this chaos, as you guys know, that I've always told you. But also, there's a tremendous amount of risk right now. What kinds of risks are we talking about? Real estate has risk, stocks, cryptocurrencies, a lot of stuff is going to deleverage and come down. Your quality of life is going to decrease. Your personal financial situation. And the wild card is the big one, the war. Those are the risks that are going to be pulling things lower. You're going to be careful of. That's why all of those things and everything we're going to talk about today, it's what makes these videos so hard to watch. If you've got the stomach to watch the reality of what's going on with the economy, then sit back and check this out. It's pretty bad and it's getting a lot worse. Make sure to subscribe to this channel so I can help you thrive through the economic breakdown. This video is divided into 3 things. Step 1, why I'm saying it's an economic breakdown. I'll tell you exactly the reasons I'm saying that. Number 2, I'm going to tell you what happens next. And then number 3, I'll tell you what I like to do in most of my videos at the end is explain to you some things that you can do, action steps you can take to position yourself better, to land on your feet, to help the people that you care about, help yourself, make a few bucks when you otherwise would have lost money. That's what this channel is all about, helping you through this economic breakdown. As a special bonus, I divided the last part about what to do into 4 concepts, things you have to avoid, things that you should adjust in your lifestyle, things that you should acquire, certain types of assets, and lastly, the awareness that you need to get through this on your feet.
Please subscribe to the Peter Leeds YouTube channel so you will thrive throughout the economic breakdown.
So why am I saying that there's this big economic breakdown? They say that the economy is so strong. They say that the unemployment rate is so low. They say that the stock market is doing so well. Well, let's take a look at it from Peter Leeds' eyes. Here's a chart of the U.S. federal debt, which just keeps on getting bigger and bigger. This debt is hiding the fact that our economy has been so weak for so long. If you take out $100,000 on a line of credit from your bank and spend that and live off of that, you're going to look like you're making a lot of money or you're doing fine, but you're not. You're just really indebted. Here's a chart of the deficit. It's from fiscal data. This is federal debt trends over time. And what we're doing here is we're taking debt loads compared to the deficit. And you can see here how it gets so much worse so quickly. This is a chart of the U.S. leading economic index. It's a bunch of leading economic indicators, which is displayed by the blue line, and here the black line is the GDP. You can see how the leading economic indicators are saying that coming up, the economy is going to be getting worse. The coincident indicators are things like the stock market, things that happen at the same time as the event of the economy. There's lagging indicators. Leading economic indicators, as displayed here, are telling you which way the economy is going to be going in the near future. And it's a bad picture. And here's our favorite chart that I always show you, monetary creation. And there's so many ways that you're hearing all these stats and surveys about different people's problems where they're saying they don't have $500 for an emergency, or they don't feel like they're keeping up with inflation, or they're mainly stressed about financial issues. And those numbers are always over 60%, sometimes 70% or more of people who meet whatever negative threshold. Everyone in general is financially strapped right now, mainly or partially because of the massive levels of inflation in the grocery store shelves that you're still seeing, that they're telling you that it's going away, but it isn't going away. Not if you're a shopper. Many economic indicators, these leading economic indicators, have been falling for a couple of years every month now. It's not like this is sneaking up on you. It's not like anyone's going to say, were there any signs? Of course there were signs. There's signs every month for years now, and nobody's really paying attention because they're being gaslit and being told the economy is strong. Here's the balance of trade. Think of this as air leaving a balloon. That's just money going out off of our shores, going to other countries. We're buying their stuff. They're not buying our stuff. That's why it's always negative. We always send out more money than we bring in. But here's the US dollar. Look at the trajectory of this. It's coming down pretty strongly, and it will go further lower coming up pretty soon. And you can look at things like gold as a reflection of how weak has the currency gotten. Because the stronger gold is, the weaker the currency is. And the weaker the currency is, the higher prices of gold are going. And if you look at it, gold's never been higher. The US dollar has never been more overly abundant. Think about it. And here's a chart of US bankruptcies. There's a chart of US delinquencies. And here's a chart of unemployment, and you can see that it's rising, as I told you that it would rise, and it's going to rise pretty strongly. And this is also, remember, in addition to the 818,000 jobs they thought were there that they had to revise downward. So even the numbers you're getting now might change going forward because they're giving you the rosy outlook, the best case scenario. Look at all these jobs we made. Yay, it's all strong economy, just like we told you. And then it turns out, oh wait, 818,000 jobs that we told you were there? We just miscounted.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
So what happens next? It's pretty clear, it's pretty simple, and you're going to agree with most of this, I'm sure. I hope, if you've been paying attention here. I thought I'd tell you everything that's going to happen with this recession in one sentence. And this is the other day. I know you've seen it probably, but here it is. One sentence that's going to happen as this recession rolls into town. Then we're going to talk about what to do about it, which is divided by things you should avoid, the types of assets you should acquire, the way you need to adjust your lifestyle or you might want to adjust your lifestyle, and also the level of awareness that you're going to be needing. So here you go. One sentence that's going to be what happens in the recession. People will have less disposable income. Expensive restaurants will join the numbers of rapidly rising bankruptcies. Overvalued stocks and just about all stocks will fall very significantly. Purchases will be put off by consumers. The wealth effect melts away. Real estate prices drop strongly. Cryptocurrencies prices will decline. Suicides and domestic abuse and crime and civil unrest will also rise. Inflation will fall until the Fed's overreaction in terms of easing and monetary creation. Homelessness will continue to climb on its record-breaking path, and the unemployment rate is going to tell you all about it. I always like to wrap up any video with action steps you can take to better yourself, get in the right position. And that's why now I'm going to give you the disclaimer right now. This is not personalized trading advice for you. Make your own decisions, live with the results of those. I'm wrong 100% of the time. I don't know the answer to anything. Make your own choices. So avoid, acquire, adjust, and awareness. Avoid. Here's the types of things that you should be avoiding right now, in my opinion. Just about every stock, unless they're a precious metals mining company or certain oil companies. And if they're a Peter Leeds newsletter approved stock, those are the ones you want to invest in because they've been given the whole analysis to make sure they're a healthy company and in better shape than a lot of the other options out there. Bitcoin will probably come down pretty strongly. Real estate is slated to start coming down relatively soon. It's been taking a lot longer than I thought it would, but real estate will be coming down. You also need to avoid certain emotions. And this is the whole new part of Penny Stocks for Dummies, 3rd edition that I wrote. The whole new part is all about getting your mind space right, and that's what Stockology will be about whenever I get around to writing that. So getting your mindset right, that is the single most important thing you need to do to be a good investor. And the one thing that'll derail any investor, especially newer investors, is a level of emotions. You do not let your emotions cost you money, and they are the most expensive thing going. You don't want to have fear, you want to have confidence. You want to switch to capital preservation rather than greed, and you should have patience rather than frustration. If you're feeling any negative emotions, switch it for a good one. Turn your biggest obstacle into your biggest opportunity. You'll make a lot more money if you're investing from a place of calmness, discernment, logic, and the things you should require in this recessionary period and as the economy transitions to a whole new monetary system coming up over the next couple of decades. As all this change happens, the entire economy based on the US dollar is in flux in every possible way right now. So you want to acquire things like cash because there's going to be so many discount opportunities everywhere. And as simple as stocks dropping a massive amount, you get them cheaper. Or things like people will be selling their assets or their houses. More millionaires made in the Great Depression than any other time up until that point. That's going to be the same thing again. I'm telling you, there's going to be so many insane opportunities. We haven't started the real collapse yet. But when we do, you're going to say, oh, wait, yeah, there are opportunities everywhere. And when I talk about the precious metals mining companies, here's an example of one of the stocks that I bought personally. Kinross Gold has tripled now in a short period of time. And after the triple, I'm still not selling because these stocks are just getting started. I'm going to say it again, and I haven't said this in many quarters now, but I used to say it almost every month. You're going to want to own some gold. And it's just getting started. This move is just getting started. Similarly, we just talked about a couple of stocks that popped up a lot in the weekend alert, both of which I said the jump is going to be permanent and it will be lasting. because of the underlying price drivers. This is Flexible Systems and Neon. Subscribers are asking, should you take quick profits now? Should we cash out? I'm saying just like with Kinross, if the stocks do well, that doesn't mean that you cash out. It means that they're doing what you expected them to do, which is the reason you bought them in the first place. These stocks are all trading higher for fundamental reasons. Reasons about their operational results. So you don't need to worry about it being a sudden blip where you got to quickly cash out and take your profits. You let the bread bake. And that's what you're going to do. You're going to sit on some of these investments that are just getting started, moving higher. And adjust is about adjusting your lifestyle. This is serious. That's why I'm being such a wet blanket, okay? Nobody wants to do the things I'm saying. But I'm telling you that it'll make more sense 6 months from now. And you'll say, oh yeah, that made a lot of sense 6 months ago. I wish I had listened then. I'm telling you to adjust your lifestyle. That means spend less money immediately, today, right now. Rent out the extra room in your attic. Sell anything that could be sold. Clear out your garage. Have a garage sale. Get a side hustle. Sell anything that someone else will pay you money for. And get rid of high interest rate debt. Try and consolidate your debts with a line of credit or something like that. Buy certain items. I can't tell you what, but whatever you think you're going to need as the economy weakens rapidly, visibly. The economy is weakening rapidly right now, right in front of our eyes, but no one's noticing it. Soon, everyone will be realizing the economy is weakening, and that's when it's going to be too late. That's why you want to make your actions now. You want to be upstream. And lastly, awareness. You want to be aware of certain things. You want to be aware of this entire topic. It's hard to watch, but keep watching this stuff. That's why you subscribe, so that I can help you through this economic breakdown. And if you want to have direct contact with me, then become a Peter Leeds Insider. peterleeds.com/insiders for a couple of bucks. Cost of coffee. And if you haven't done it yet, please click like on this video. It really helps us get the word out to people that you know that this video is going to help.
Please subscribe to the Peter Leeds YouTube channel so you will thrive throughout the economic breakdown.